Welcome to the Mark Workman Show, and we just thank you so much for joining us today. We have a great guest. I'm excited to have him. I love this guy. He knows I do. I actually tell him that on the phone, so it's not a mystery to him how much respect I have for what he's doing. And this is Steve Stengel with Encore Energy, and really, he's coming today with some exciting news for some discoveries they've made and the opportunities to invest in oil and gas. And we're going to talk all about that today. We really encourage you to listen closely and reach out to Steve if you're interested in this type of program. He would explain it even more to you in the future, but there's some exciting news today, and he's just going to get right into it. And thanks, Steve, for joining me, and the floor is yours. You can tell us more about what you've got going on.
Well, Mark, I'm really excited today to announce that not only have we made 3 oil and gas discoveries in a row, or one discovery well with two offset successful producers that are going into production. We ultimately feel like we can drill upwards of 15 to 20 horizontal wells on this proven trend, where each and every well is going to be proven and offset to another producer. Okay. And with horizontal drilling technology and the multi-stage fracking, not only do we believe that we can be successful at least 90% of the time, but we also believe that we're going to be meeting the ORI. We're going to be bringing that ORI well above industry average. And right now, our first project is averaging about a 38 to 40% ROI cash. Now, when you take the tax benefit and you add it to the mix, your investment is looking to be over close to 60% first year. Okay.
Wow.
And the first well is the H1A that's currently in production. That's what you're receiving your checks on every month, which, are in the range of $3,500 a month for a $100,000 investment. Okay. And the second well we've drilled looks very similar, if not identical, to the H1A, the first well, and the third well, which is the H3A, looks well above both of those wells. We really got into some great pay on that well. And of course, we're drilling our project to the north, which is offset to a producer to the north, and then we're drilling another well offset to the H3A as well. So, we've got about 10 to 15 more horizontal locations out here, and we believe that we could have anywhere from 12 to 17 locations in total, and all of those are PUD locations. Every well we drill is going to be offset to another producer. So, we've really been able to de-risk the area. And with the tax benefits, it's getting ready to be the fourth quarter, and everybody that's in the investment world for oil and natural gas, they're looking for those tax advantages. And with Encore, I'll just come out and say it. We have the best. Ours are better than everyone else. And the reason why is there are no middlemen. You're investing operator direct. Your money goes direct to the wellhead. There's no intermediaries, investment companies, or broker
which is
dealers,
really unheard of,
like
really.
Right, exactly. And so it's operator direct. And then also with horizontal drilling and fracking, the multi-stage fracking is a huge part of what we do, and it's 100% intangible in nature.
Right.
So our first year intangible drilling cost deduction calculates at like 87.2, which is higher across the industry than 90% of the operators. And so in the first year, especially in states where you have both a pretty significant state income tax alongside the federal tax, you could see 30 to 40% tax savings and maybe, to where when you make, let's say, $100,000 or more investment, but let's just say on $100,000, you're looking at risk of 68 to 74,000,
Right.
and then that makes the cash flow when you start cash flowing these wells. And right now all indications are is we're going to be approaching in the range of $100,000 of gross revenue per well per month.
Isn't that
That's kind of
amazing?
our baseline target.
It's just
Okay.
staggering, how well you've led this because, I know you're the foundational person to kind of lead the charge on all the research because you've taught me quite a bit about that. And the amount of time you put into discovering these things in terms of your research on former wells and how they've done and how close you are and all those kind of things. It's a real testament to how hard you work. But, really, when they call, they're talking to the guy that's done all that research that knows.
Right, exactly. And the thing is we have investors visiting with us like you visited with us, and they visit with us quite regularly, and we love it. And once an investor comes to the field, they start to understand that in the oil and gas industry, most oil and gas investments are structured to meet the needs of the investor. Okay. And that sounds great, but they focus on time to drilling, time to production, and rate, initial rate. Okay. How quickly can you drill? How quickly can you get turned back around and get a check to me? And how much will the well produce? Well, when you're drilling a vertical well and you drill it in 90 days and you have a check out in 6 months, well, that feels good. But the reality is that check is going to be short lived, and you're going to see decline if you even make a well. Okay. And so with horizontal drilling and fracking, we've been able to go into tight oil Appalachia sands where 90% or better are being successful, and not only successful, but delivering a very good return on investment. Okay. And ultimately, we're targeting in the 35 to 40% range, but we want to do better. We're not out here looking for, locking it in. We're looking for, like on the H3 we just drilled. We don't really know what to expect there, but we expect a lot better than that.
Right.
Okay. And, on the well that we're getting ready to drill next to the what we call the core well, um, that well made close to 30,000 barrels in the first year. And if our well made that at the current price levels and everything, you would be pushing near, a cash return exceeding 50%, maybe approximating much higher, if that's the case. So we're looking, the horizontal wells with multi-stage fracking are not only about de-risking, they're about providing a higher upside potential. And I believe investors that have put their money in oil and gas, they want a shot at that upside potential. Okay. And there are wells out here in these sands that are doing to the equivalent of, payouts in less than a year.
Oh, wow.
And I'm not saying that you're going to get that all the time.
Right.
Okay. But that exists. That exists. And the downside is the 25, 30% targets, you
Right.
know. But there's a lot of companies that are promoting, maybe initially you get a 20% return, and then in every subsequent year you get 10% for many years. Well, that's not a reason to do oil and gas.
Yeah.
And then we're focused on the future and potentially delivering an exit strategy in 7 years or something like that through big oil that really provides a lot better upside to the investor.
So
Okay.
you're creating an attractive environment to get noticed as well, not just on the initial investment getting a nice return, but long term you're trying to get noticed as well to get maybe purchased.
Well, I heard an ad over a year or so ago saying invest in a piece of your own oil field. And that's what we do.
Yeah,
Okay. You're not investing in a project, you're investing in an oil field. You're investing in a resource. You're investing in a reservoir. And that's what we're doing. Okay. Wells do not really produce oil, the reservoir produces oil. Okay.
right,
Wells are just conduits. Okay. So if you drill in the right area and you're getting the right pay and you're getting in the right areas of the reservoir, you're more likely to make the higher volume returns. Okay.
right. Yeah, that's interesting.
So that,
And the oil fields in obviously such a dicey thing, and you love it because if I get you going, all I gotta do is say one comment, and you can go for a long time. You really
right, right.
you love what you do, and I know you do. What's the biggest risk for an investor other than maybe the well doesn't work out, but what's something they need to know going in,
Well,
so they're
no,
not creating false expectations.
right. Well, the investors that we're typically looking for are Um, you have to be an accredited investor, and I would say the majority of our investors are well above 5 million net worth. A lot of them are in the 20 to 30 or higher. Okay.
So
And we
they're
have
yeah,
some, you know, and their objective is to diversify in multiple horizontal wells as we develop a field. And as we develop a field, every time we drill, we have more data and we learn more. Okay. Now, that doesn't mean that every well is going to get better and better and better. That's what we hope for. But as we progress, we start making better wells based on better information.
right,
And as we progress, Encore's investors are putting up more money with the expectation of a better return and lower risk. Okay.
right. Mhm.
And that's because of data. Okay. Collective data. As you drill this well, you learn a lot more about the well you're about to drill. When you drill that well, you learn a lot more about the wells you've already drilled and the next one you're going to drill. All
Right.
right. And so, yeah, ultimately, I am looking for investors that have not only a need for the tax benefit and want good monthly income, but they want a value creation, an appreciating asset that has a long term strategic plan.
Yeah.
Okay. It keeps things exciting, you know?
Yeah. Yeah.
They want to own an oil field. They want to own part of an entire oil field and not
I've
just
never
one
thought of it
well.
that way.
Yeah.
As an investor, my plan has always been to be very, pretty level and pretty consistent. You probably see that in me is that I kind of, every project you have come up, I pretty much sow some money into it, but I don't go crazy and I don't, go the low
Right.
side. I just kind of keep it pretty even. That's kind of my plan. That's the way I think, I guess. But at the same time, I can't forget what my point was going to be, but basically, um, for me, the consistency is what helps. But I having the direct contact to you has been a big deal. I think the idea of having ownership is a big deal to me. That I don't tell people that I'm a part owner in an oil field. I don't talk that way. I don't even tell people what I'm doing. Actually, I'm pretty quiet about it.
Right.
But
Right.
I think you just hit on something there. Is that we're actually doing a buy-in as a with you. It's not just us investing in a project. You mentioned that earlier. It's not investing in a project. It's actually you're getting into an ownership position that you get skin in the game at that point. You
Right.
start you
Right.
start
Right.
thinking differently
Right.
when you have skin in the game. Wouldn't that be true?
Yeah. And so, like these wells out here, I mean, they may have 100,000 barrels of oil, maybe more in the ground. And, in the first first 5 years, you may produce, you know, half of that
Right.
or something, and you still have maybe 50, 75,000 barrels left in the ground in 5 to 7 years. That's a lot of money.
Yeah.
Okay. And so, you know, we try to produce the wells to where we can achieve a desirable rate of return, but we don't pull on them too hard so that we still got a lot of good reserves in the ground for many years. All right.
Right.
Maybe for
Right.
20 years, you know?
20 years. That's just
Yeah.
astounding, isn't it?
Yeah. And, big oil, they like almost exactly opposite of what an investor wants. Okay. The investor wants big checks, big tax benefits, fast, fast, fast. And what big oil wants is they want years of an annuity of revenue, and it doesn't have to be knocking it out of the park. It just has to be solid revenue that justifies and validates their reserve studies. Okay, because their reserve studies and their reserve reports, that's what really moves a publicly traded E&P company. Okay.
Right.
Yes, production is important, but really not as important as their reserves. All right. So, you know, with Encore, we're trying to give the investor the great tax benefit, the great return on investment, and then a long-term strategy. Now, what is the downside to horizontal drilling? It takes a little longer. Okay. And when you're developing a horizontal oil field, it takes longer and produces a lot more oil than a conventional vertical field. It's that
Right.
simple.
Right.
Okay.
So that's probably the big challenge for the investor side of it, and just mentally. I always say I'm always learning new skills. And one of the new skills I have on my whiteboard is I'm developing the skill of waiting, you know, and
Right.
it's hard on investors when they've maybe written a check, got the process going. You're updating, you're amazing that way, but, the time frame to develop these projects, can be probably hard on the investor and their mental state, I would say. And I imagine you're doing a little bit of counseling all the time, I would think, with that,
Well,
but
the
maybe
thing,
not.
what I tell people is when you write a check and you get involved in this, it's a long-term investment.
It is.
Okay. You gotta remember 90% of what you hear about the oil and gas business from all legitimate sources is not true. Okay. It's made up. All right. Big oil paints this beautiful picture of how much oil we have and all that. And that's not true. Okay. It's not that we're going to run out of oil. We're going to run out of cheap oil. And
Right.
that's not something that might happen. That's something that's going to happen. Okay. And that's because oil and gas reservoirs are pressure depleted. We're not drilling anymore. Okay. Or we're not drilling anywhere near the rate that we need to. All right.
Right.
And you think about it like this, we've drilled in so many areas across the globe. When you start looking again, it's harder because you already looked here, you've already looked here. It's just the way it is.
Right.
And so we have to go deeper. Deeper means more money to explore. We have to
Right.
go longer laterals, more money.
Yeah, you've
Okay.
described it as we've taken all the low hanging fruit
We
in previous
we
podcasts. You talk about we've gotten kind of the easy stuff, and now we have to, there's still oil. We just got to work harder to get it.
Right. We got to work harder to get it, and all that hard work will be reflected in the price.
Sure.
You know, so, but ultimately, I feel fantastic where we're at right now. We've drilled 3 great wells in a row, with our best well being the last well we've drilled. We're getting ready to drill what we consider our best drilling prospect on paper and our best drilling prospect offset volume, which means we're drilling in an area where this is the largest well we've ever drilled in close proximity to. Does that
Okay.
make sense?
Yeah.
Yeah. And so we feel really great about that project. And, right there at the H1A, we made a discovery well there. What was it, 2 years ago? And now we're planning 8 wells there. And
Yeah.
we've drilled 3 so far, you
Right.
know?
Right. And
And
you
so,
got
mhm.
that doesn't include the Caperton and some of those other projects, right? That's just this
Right, right.
H1.
Those are to the north. Yeah, the Caperton is our next big well that we're going to be drilling, and that of course is offset to big oil and offset to big production. So we're pretty excited about that.
I bet. So, can you explain more how the tax deduction works? I mean,
Okay, so let's use a $100,000 investment example because it's clean and easy. If you invest $100,000, that means $87,000 of your investment you can deduct the year you write the check. So, like in 2026 in the fourth quarter, anytime right now someone invests, they can take the tax benefit for the 26 tax year. Okay. So they could use 87,000 right now as a deduction from 2026. Now, the other thing you can do there, let's say you don't need the 87,000, which most of Encore's clients they do need it. Okay.
yeah,
But let's say you don't, you can take $100,000 deduction split over 5 years, 2020, 2020. Okay. We call
hmm
that the amortization.
yeah. You
But the
amortize it out.
majority
Yeah,
of everybody takes the first year 87%. Okay. And then the 13% is amortized. You receive those deductions in future years. And then, of course, 15% of the production revenue for the life of the well as a depletion allowance is also tax deductible.
right,
Okay. So not only is it 100% tax deductible, it's really more than that. Okay.
right,
Because you get to deduct a lot of the revenue from the well,
right.
you know.
And you and
But no,
yeah, and I already know
mhm.
this, but you send out K1s, and there's quite a bit
Yes.
of accounting done on your end that we
Yeah.
receive, and it
It's,
really makes
it's,
it quite simple, in
it's,
my opinion.
It's real simple. When someone first inquires about an investment, we send out an example of a prior year K1 that was actually sent out, showing the $87,000 or 87% IDC, and that model that we send out is for them to hand to their CPA,
Right,
because as soon as he gets that model and the letter from our CPA firm explaining it, they don't have any questions. Okay.
right.
It's easy peasy for tax preparation.
Do you find that most people not, CPAs not involved with the oil field really don't know about the program, or are they aware
Well,
of it?
here's the thing. If they don't know about the program, when they get this document from our CPA firm and the K1 example, they know about it and they
Sure.
agree.
Yeah.
Nobody calls me up and says, "Hey, this isn't legit." It's here it is. This is how it works.
Right.
Okay. And
Yeah.
the thing about it is this was created in 1986, and the intent of the federal government was to provide incentives to promote domestic drilling. So
Right.
they want you to have this tax benefit. The
Right.
IRS wants you to have it so long as you're investing in a well that's drilled, et cetera, et cetera. If
Well,
you're
it's a
doing
national
that,
security issue,
huh?
E-
Exactly.
energy, as we know what's going on in the world politically, but energy is a national security issue. I guess we're depleting our reserves, and I don't know if that's true or not, but I mean, those are the kind of reports you get with some of the things going on right now. But
Right.
oil and gas is not a small thing to be involved with, and it's really important for the future of our country, of our families, and those kind of things. So to me, that's a big motivator as well, because I really care about that.
Right. And we are shipping directly to the refinery, and we get our oil is in the 40-degree range gravity, which is
Okay.
the premium stuff.
Yeah, that's the
Okay.
best.
Yeah. If you go to WTI Plains Index and you look, we get the highest price for crude oil. I mean, pretty much in the country, because it's good oil. It's 40-degree. It's conventional oil. It's not shell oil. So it's kind of light, medium, and it is what the buyers like,
Right.
because it can be used here, it can be used elsewhere, and it's very versatile. And they really like the oil. It's a great product, you
Right.
know.
Well, yeah,
Yeah,
and that matters. Obviously you want to,
absolutely,
they're if they're
absolutely.
yeah, it makes it
Yeah,
easier for you to sell. Really, it's
yeah,
interesting how you hit these wells and all the work you've done, preparing for this, and then it's fortuitous that we do have the higher price structure in place as you're initiating these wells, and I don't know how long that'll last, but it's got to be a huge blessing for you in terms of what you've planned and done.
yeah. I mean, it is a blessing, but the reality is we've been living in a lie for a long time with oil
Yeah.
prices since 2014.
Yep.
Okay, and look, it's not just me. Everybody in the oil and gas industry believes what I'm about to say, and that is we're headed for a tsunami of much higher prices.
Definitely. Without us.
Because,
Yeah.
I mean, it doesn't take. And when you hear about price analysis from the news or uh, from analysts, nobody wants to dive into the real far left of the supply side. Okay. Everybody wants to talk about Iran and disruptions and things like that. Nobody wants to talk about the fact that we're producing records amount of crude oil at the world level, at the global, maybe 107 million barrels, 105 a day, in that range. But we're doing it at much lower reservoir pressures. We are pushing our wells hard, okay? And we haven't been drilling. And the fact that we haven't really been drilling is what's going to drive up the price, because when Trump first came into office in his first term, there were quite a few wells drilled. All right, in the, let's call it the shale play, the U.S. shale play, being both the national shale play and the Permian Basin. All right, and then as we moved more into the Permian Basin and less into the existing shale plays, under Biden, there was not a lot of drilling. But guess what? There was more fracking under Biden than there was under Trump. That's because it was drill under Trump, frack under Biden,
Right.
because drilling requires permits. Fracking doesn't require permits. They are permitted as a part of the drilling permit
Yeah.
process.
As a completion process.
Right, as the completion process. So, during the Biden era, we fracked. And now we are coming into about, oh, what, on average of 3 to 5 years from the Biden era of when the fracking started in the first, let's say, 2 years of his term. All right. We had a lot of wells awaiting frack. We don't have those wells awaiting frack anymore. And most of that flush production that you're seeing from that period is explaining why we're having 13.7 million barrels a day right now. Okay. But that's getting ready to go down, because all of the Biden fracking, the flush, which means, as you know, these shale wells come up and start out producing a whole lot, and then they and then they um and then they start to decline. All right,
Yep.
they start to decline,
Fast
and
too.
right,
Very,
right,
very
and
fast.
so an Encore's goal is to make money off that decline, because we want to get the tax benefit. We want to get at least 3-5 years of production. You get the majority of your good production. Then when you got your wells down to a what I call more of a stripper rate for 15 years, that's when they're really valuable from an annuity reserve perspective to large oil companies. Okay. Nobody thinks about that. All right. But
Well,
what
have
the large
you've
oil
used
companies like,
you've used
huh?
the word annuity twice now. Is that for investors in who come to this and don't know anything? You have to do a lot of
No,
teaching. Is that a
no,
good word to use or not?
the big oil companies like the annuity because see what moves the big oil company publicly traded is reserves. All right. And what makes your reserves is your production validating the reserves you're claiming in your reports. Okay. So if a big oil can go out and get lots of reserves, lots of resources, and it's steady Eddie, they really like that. Okay.
Right.
Now they're going to have more aggressive things in their portfolio, but if they've got this real steady Eddie Appalachia Basin stripper horizontal well production that goes for the next 15 years without changing anything, they like that. Okay. Because it's solid. All right.
Hmm.
And so the bigger oil companies love to come in and buy out existing oil fields that are consolidated, which means they can connect. Okay. They connect assets. And that's what's happened, in the Appalachia Basin. Everything's being bought out. So all of our neighbors want to connect to us at some point in time.
Ah, okay.
All right.
So
Does that make
that's
sense?
a growing trend then, that merger even in your
Yeah.
area.
Yeah. And, that might take years to do, but not that many years.
No.
And because Big Oil would like to own your asset as soon as it goes into decline, because then that gives them more, maybe 15 or 20 years of production where they don't have to worry about anything. Does that make sense?
Right.
That's
Yeah.
their thought process. And
Yeah.
like I
And
say, Big Oil is going to do other things too, but they really like this is part of their portfolio. This is the low risk part of their portfolio is big stripper production. All right.
yeah. Yeah. Well, the I always say that, like, and you have such a great beat on all these subjects. It's amazing how much you know. I always talk to you about that. And I'm involved in oil field with with RMI supply and
Right.
I'm actually developing a new product.
Right.
It's the Rhino HD system. It's for horizontal drilling. So
Right.
because those guys buy jugs. They don't buy truckloads. They buy 4 boxes of PHPA and that kind of thing for a little product on a site. So I'm developing a product line for both ends of the spectrum. But I'm just amazed at how much there is to learn about the trends and
Well,
how easily you can be tricked into, especially with high prices. Everyone says, "Oh, you must be making a killing," and I'm like, "What are you talking about? It means nothing." And I don't think people realize how intricate all the little things you've talked about, mergers and acquisitions and 15 years and you know what I mean, the tax deductions. There's a lot to learn in this, and
well,
you're invest.
so many investors come right out of the gate. They want to know how quick you can drill, how quick you can get to production,
Yeah.
and what's your rate going to be. And I know right then and there, that guy is headed for disaster.
Right.
Okay. And I hate that. But, that's money returns on investment. If you want to be an oil and gas investor, you have to think long term. I'm
Yeah.
sorry.
Yeah.
Maybe you should go do something else. I
No, and
mean,
I'm
and
with you. Just
and
speaking, speaking
um,
as an investor, I approached it that way when I talked to you from the first go.
right,
Is
absolutely,
is I literally am thinking I'm 61 now and I'm going to work probably for a long time. I can't imagine quitting doing anything else. But the point of it is the return over 15, when you say 15 years or even 20 years, I guess I wasn't even totally aware that that's how long it would go. You know what I mean? On my investments. That's pretty exciting for me just to hear that today. I never thought it would be 15 to 20 years, but you're saying
Right.
that's possible.
Oh yeah. I mean, now these wells, the ultimate goal here is, and a lot of these wells may produce oil for 15 to 20 years and then go straight to gas and just be gas stripper horizontal wells for another 10 or 15, you know?
Wow. Wow.
And so they'll just, you just don't know,
It's amazing.
Um, yeah. And so, ultimately, I want to like, with Encore, I'm very happy with the returns that we're making in the East Field. I'm very happy with it. I'm very comfortable with delivering a solid return across the board. And I'm really excited about one of these anomalies.
Hmm.
Okay. I think the H3A is going to be an anomaly.
Yeah.
And what I mean by that is it's going to go like this. It's going to go way high. All right. And
You
it's
look at
going to
your
be
face.
skewing our, what's
Look
that?
at your face. You're pretty excited.
Yeah. And, it's going to rock.
Yeah.
Okay. And this well that we're drilling right now, the question is it, or that we're getting ready to, is it going to outdo that well? And I've got all these investors asking all these questions. I'm like, what does it matter if you're in all of them?
That's exactly right.
And
Yeah.
so, what I tell investors is when we hit a good well, if you want to be an oil and gas investor, when we hit a good well, I know who my oil and gas investors are. They call me and they're like, what does the data say? Okay, on this well. And then they plan accordingly. And that's
Yeah.
what we do in the oil and gas industry. We drill, we stop, we reallocate.
Well,
Okay.
I've been the opposite though. I've never asked you for any data, and I just do whatever you tell me.
I know it. And that's why I'm telling you on this H4, I told you that we need to talk. Okay.
Okay, but
So I'm
it really speaks to how you've handled yourself. I've been over my career. I've always been self-employed. I've never really had a job. I've always created my own
right,
future. But
right,
I would say I've been robbed probably 5 or 6 times by partners, close friends, that kind of thing, to the point
right,
where I'm so
right,
cautious that you probably don't know this about me necessarily. I've never talked to you about this, but I've been burned so bad, like right to my face. Like I can't even tell you
right,
how bad it was. And so it made me so cautious. The human race is terrible. I hate to
right,
talk this way, but I just got down pretty where I just pulled back and, really kind of made myself almost isolated in some ways with my work.
right.
But I can tell you that spending time with you on site, meeting the guys, I encourage everybody to take a visit. You will get a feel for this, like, oh, they're on to something here, and
Yeah,
I can honestly tell you that, within me is this huge caution about everything because I don't trust anybody, and I'm just being truthful. But at the same
yeah,
time, as an investor, I've almost gotten to the point where you might not hear from me for months
right,
if you know that's true, and that
right.
really is a testimony to you, you know, on how you've taught, how you encourage, how you communicate endlessly with emails, photographs, videos. It's endless, isn't it?
Yeah.
You do a
And
lot.
like I had some investors out there. I guess we were drilling the H3A and we just finished up. And, we've got roads and locations built out of the mountain, all this infrastructure, horizontal drilling, multi stage fracking, all this stuff. But I told them, you see that little trailer over there offside the drilling rig? That's the mud logging trailer. That's more
Mm,
important than all of that stuff we just discussed together. Okay. That is the single most important thing out here. If you don't have that, you don't have any of the stuff you see around us.
right,
Okay. The understanding of the rock. Okay. It's not a gamble. I'll say that again. It's not a gamble. It is a
right.
calculated risk based on lithology, based on rock analysis, comparative analysis, over and over again.
Yeah,
All right. And that's
yeah,
why we do strat wells. I like to call it cheating. We drill strat wells out in front of us to get a look at the data, like a biopsy, so we can drill and land right in it.
Right.
Okay.
Yeah.
Yes, it costs money to do that, but it's a fraction of the horizontal well cost. I'll tell you
Yeah.
that. And
You've described.
it
Yeah.
is one heck of a good insurance policy.
Yeah, you've
Okay.
described the process of we got within 4 feet of our target. I
Right.
mean, that's how precise you are at thousands of feet, right? And it's pretty amazing that you're able to do that. But again, you've done so much work and so much research, and visiting the site again, just getting to know you. I would encourage any investor to reach out if you're interested at all. Maybe as we close
Absolutely. You know,
here,
I,
go ahead.
I've got guys that come down in groups. I've got people that come down. I mean, literally, it's gotten to be where 90% of my business comes through referrals. They
Yeah.
go to them and say, "This is how much I'm making every month, and I've invested with 4 other oil and gas companies, and it's more than everybody else put together."
Right.
Okay,
Right.
and so you know, um, in the East Field, okay, and that is where we're drilling, where we're going to be drilling for a very long time.
Right. Well, cool. Well, we've covered a lot of ground, and as we close out, is there any pitch you want to make at the end here? Because you talked about
I
the
would just tell
tax.
everybody, we hit a really great well. I've got 2 or 3 projects available right now that are great PUD locations that are really, really good. And when I mean really, really good, I mean they're in that classification of, okay, we got more data, so there's lower risk. We've got more data that warrant higher volume return. Okay. And I've got those right now. All
Right.
right. And I've got those that it can not only be one well, but you could have some diversification as well. And these investors think that they have to go out and they need to get a tax benefit, so they've got to put 300,000 in one well when they could put 100,000 in 3 different wells.
Yeah.
Diversification is very important. All
That's
right.
been my approach, and
Absolutely.
I believe in it 100%,
Yeah.
so
Data and diversification.
yeah. Well, as we close today, again, Steve, thanks for coming. I can't even tell you how much I appreciate discussing with you. We're going to, keep doing episodes like this as different projects show up. So you remind you to contact them and reach out. And again, in the description, there will be ways to contact Steve directly, his phone number, the website. You can refer to the podcast and that you heard it. And you've gotten quite a bit of training today, whether you realize it or not. But Steve will spend time with you and help guide you to a decision. It might not be for you, might not be for everybody, but there's just some incredible opportunities here, and and I can just openly speak to the character of Encore Energy and how they've approached and handled me as an investor. And I'm a huge supporter, so I'm not even going to lie about that or try to hide any of that. So anyway, if you would also please subscribe and like the show, it really helps us grow. We're getting more and more views all the time, and as we try to grow this impact for the oil and gas industry and other industries that I'm promoting, that's really helping. So it's free to you. If you can subscribe and like, that would be great. Steve, thanks for coming. I can't even tell you how much I appreciate it.
Appreciate it, Mark. And hey, I'm going to be looking for you this fall when we're drilling the next well.
Actually,
Be great time to
off
visit.
air, we'll talk about it. I've actually mentioned to my wife today I need to make another trip, so
Sounds great.
we'll get down
Talk
there,
to you
both of us
soon.
probably.
All right. Take care.
See you, buddy. Bye-bye.
Bye.